Okay, great. Okay, yeah, thank you. I'm sure you can see my screen and I'm sure you can hear me clearly. So this evening, we want to quickly look at taxation of specialized business. But before we go into it, there are some short notes that we have in the study pack, that we just need to quickly look at so that everybody can have a proper understanding of what we are doing as it relates to this particular topic. So what is this taxation of specialized businesses? There are some businesses that they are classified under specialized businesses. What are those kind of businesses? There are some businesses that they are making millions of naira from Nigeria, but they don't have a registered company in Nigeria. So all those kind of companies, all the money that they are making in Nigeria, they are supposed to pay the taxes. The income that they generated in Nigeria, they are supposed to pay the taxes to the federal government of Nigeria through FRS. So this is what we want to look about. But before we look at it, what are the necessary things that we need to look at when it comes to this taxation of specialized businesses? Actually, I should have told every one of us to read all this on our own, and let me just face what I need to do today. So, specialized businesses. And the objective of this chapter is to ensure that the readers understand the peculiar tax laws relating to specialized businesses, including the computation of the taxes payables. So what are these specialized businesses? We have the different types. We have the number one, agricultural trade or business. And this means any trade or business connected with the following: establishment or management of plantation. Please, I'm reading from your new study pack, please. Study pack 2025, that's where I'm reading from. So chapter, I can't remember the chapter, but you can just scroll through it if you want to. So agricultural trade or business, these are the business that are established or managed for plantations for the production of rubber, oil palm, cocoa, coffee, tea, and similar crops. And it also involves the cultivation or production of cereal crops, tubers, first of all kinds, cotton, beans, groundnuts, shea nuts, and bananas, vegetable, pineapples, bananas, and plantains. And also we have the animal husbandry. And when we are talking about animal husbandry, we are talking about piggery, poultry, cattle rearing, fish farming, and deep sea fish trawling. So we have all those type of names under all those type of businesses under the agricultural trade or business. Please, you can read all these ones on your own. Then we have another one, real estate investment company. And they mean a company that is duly approved by SEC, Securities and Exchange Commission, as a real estate investment scheme in Nigeria. So what is now the real estate investment scheme? It means any company, trust, or other such corporate structure approved and regulated by the Securities and Exchange Commission, which is primarily engaged in and invest in income generating real estate or real estate related assets, and is expected to distribute less than 75% of its income within 12 months or receipt of the income. Then what is real estate? Means income generating property consisting of land or building, holding such income generating land and building. Then we have the regulated securities lending transaction, which means any securities lending transaction conducted pursuant to rules made by SEC. So, but let me just talk about this real estate investment scheme, right? I'm sure most of you guys will be seeing a lot of all these companies that they will come to you that you should come and invest in land, that they will collect pool of funds from different people, and they will tell you that too, come and invest money in land, that after so and so year, you are going to be collecting a certain percentage or blah 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 as returns on investment. All those kind of companies, most of them, some of them, because I think I've read in the news, I can't remember the name of one that SEC wrote in the news that whatever the company is doing is illegal, that nobody should trade with them. But this is a company that a lot of people have invested a lot of money with, thinking, oh, they are going to help them, you know, to generate funds and to help them make money. So that means all this kind of estate organization that they will tell you, come and if you don't have money to buy a full plot of land, that they can gather plenty people together, they will invest the money for you. Please, if they should come and meet you, be asking them all the relevant questions. Are they registered under SEC? That means they are supposed to register under SEC. Anyone that is not registered under SEC, I will advise you, please, it's better you go and use your money to eat amala and than giving all those kind of people money. If the money goes, the money goes. Nobody, they are not under the regulators. They are not under the regulators. So tax provisions for real estate companies and real estate investment companies that are approved by SEC under the relevant provisions of real estate investment scheme. The taxes that relate to real property transactions in Nigeria are as follows. We have the company income tax and we have the personal income tax. So tax is imposed on the profit of a taxable persons, right? Rent or any premium arising from a right granted to any other person for the use or occupation of any property is subject to tax. Also, they are supposed to pay withholding tax, and they are also expected to remit tertiary education tax, value added tax, and land use charge, stamp duties, and so on and so forth. So these other ones is just to be looking at, okay, what are the other definitions of the real estate investment company, and what are they supposed to do under SEC that SEC must approve them with? Okay. So don't forget that this REIS, real estate investment scheme, is a company, right, that isn't to real estate. But what they do is to do pool of funds. They just do pool of funds from different investors, different individuals that will come and invest. We are buying real estate, blah, blah, blah. They will collect the funds and they will go and invest in real estate properties. So that's what they majorly do. And when they do that, they are going to be generating profit. There is expected that that profit that they are going to be generating, they have to be doing what? To be sharing it to all their investors, to be sharing it, most of them, to all their investors. So what are the income of all these companies? We have the rental income, dividend from another real estate that they invested in, gains from disposal of assets, and others, e.g. fees and other income not related to all those stuff. Then taxation of the income of REIC. We have the dividend and the rental income under REIC. And then this section relates to dividend as a basis for computing company income tax due to no total profit, or total profit are less than the amount of dividend paid. I think we have talked about this one when we look at companies, right? So rental dividend income made by a real estate companies distributed to its shareholders under a real estate investment scheme are exempted from Section 19 of CETA. But the rental and dividend income distributed to the shareholders shall be deducted from the total dividend paid in order to arrive at the net amount to be considered for the purpose of Section 19. So all these places are, I think, they are just theoretical aspects, which I believe most of us, you know, we can actually read on our own. We can actually read on our own. So let me go to the business of the day, which is the taxation of the specialized businesses. Taxation of the specialized businesses. Let me try to expand the screen a little. I hope it's clear enough, right? I hope the screen is big enough, right? Oh, there's too much. Okay, good. Thank you. So taxation of specialized businesses. Just as I've mentioned, there are some entities in which that is expected for them to be remitting tax to the government. And some of those entities, they don't have any registered office in Nigeria. So, but they are generating income from Nigeria. So they are under the provisions of Section 14 to Section 17 of CITA, Company Income Tax Act. And this Section 14 to 17, it covers the taxation of profit on specialized businesses. So the specialized businesses covered by these provisions are the following types of companies. We have number one, foreign companies engage in air and sea transportation. That one is covered under Section 14 of CITA. Then foreign companies engage in cable undertakings. That one is covered under Section 15 of CITA. Then foreign companies engage in insurance business, life and non-insurance. Then we have Nigerian companies engage in insurance business, life and non-insurance. Then we have companies engage in authorized unit trust teams. So that one is under Section 17 of CITA. Okay, before I move on, please, there is one place that I think I can use to play with in that taxation of specialized business, which is difference between e-commerce and I can't remember the second one. I think I've seen that question so much in your theory. Difference between e-commerce. Let me be sure of it. I think it's under it. Yeah, it should be under it. Difference e-commerce or something. So please, I will advise every one of us to try and read it. I've seen where they ask that question every time, most of the times. Differences between e-commerce. Let me scroll down. Maybe it should be under this place. It should be under it. Please don't be angry. Oh, let me be sure. Let me be sure I know what I saw in the question. Yep. Definition of e-commerce. I think this is it, right? Yeah, it should be under here. Differences between e-commerce and e-business. Please, differences between e-commerce and e-business. I've seen a lot of times where they ask them question that they should state the differences between e-commerce and e-business. I think I've seen it so much in your theoretical aspect of the exam. So I'm sure some of us too that we have gone through the study pack will confirm to me that they used to ask these differences between e-commerce and e-business. So please just do me a favor, try and read it and try and understand what is going to be the likely differences between e-commerce and e-business. Somebody said my voice is breaking. Please, is my voice still breaking? I guess it should be my network. Oh. Oh, please, is my voice still breaking?
No.
Oh, okay. Maybe it's my network.
It's fine now,
Yes,
but
no,
then it
your
was
voice is not
breaking.
breaking.
It was breaking then, but now it's okay, sir.
Hey, don't be angry. It's our network provider. You know, they are not perfect yet. They are not perfect yet. Just help us manage. Please don't be angry. Thank you
No,
so
no,
much.
no problem.
So please help me, do me a favor. Make sure you know the differences between this e-commerce and e-business. Please try and read them. Please try and read them. Okay, now let's go back to our taxation or specialized businesses. Let me give you an example of this company that can be under this kind of business. Number one is Starlink. Number two, Facebook. Number three, I think is it Instagram or all those blah blah blah. You know, all those kind of companies, all these adverts that you see most Nigerians doing there, that oh, come and buy this thing, oh, it's very, very good. You like one, there is one I stumbled on one on Facebook that the guy said he's selling a sunshade that someone can use to drive in the night, blah blah blah. All those kind of adverts that people are doing on Facebook, they are paying money for it. I hope you all know. They are paying money for it on Facebook. So that means in one way or the other, Facebook is generating income from Nigeria. So that income that Facebook is generating from Nigeria is supposed to be subjected to tax in Nigeria. Another example is Starlink. I hope you all know what Starlink, the ISP provider, that's Elon Musk. That guy, when he rolled out his business, that he entered Nigerian markets. He entered Nigerian market with full force, and then he get a good market share of the Nigerian market when it comes to internet service provider. And the stuff was so cheap, and although he pay for dollar, but the speed of his internet, a lot of people started subscribing into it. And you know, in a month, I think his subscription one time was like 37,500. He increased it to maybe 50-something thousand, thereabout, or 80-something thousand, thereabout then. So look at that kind of company, Starlink. I don't think Starlink has a registered office in Nigeria. I don't think so. But all those is gadgets that is selling in Nigeria. He just did an agreement with one company that is helping him to sell them in Nigeria. So all those kind of stuff that Starlink has, every month, that guy is making millions of money from Nigeria. Monthly subscription that people are paying in Nigeria for Starlink is huge. So all those kind of income that guy is making from Nigeria, how do they subject it to tax in Nigeria? What are the processes? What are the procedures at which they are going to be assessing it to tax for all the incomes that they made in Nigeria? Another one that we have is all these shipping companies, all these airline companies. There can be some airline companies that they don't have any registered office in Nigeria, but they are making money by picking passengers from Nigeria and they are flying them to any other countries. Yes, all those money that they generated in Nigeria, their income that they made from Nigeria, then that income that they made from Nigeria is supposed to be subjected to tax in Nigeria. All those shipping companies, airline, telecommunications companies, and so on and so forth, we have them like that. How do they subject them to tax in Nigeria? Those are the things we want to be looking at. So we are going to pick the first one, taxation on foreign air and sea transport companies. Taxation on foreign air and sea transport companies. Foreign companies engaged in air or sea transport business are accessible to tax in Nigeria in respect of their income derived from loading of passengers, mails, livestock, or goods into aircraft or a ship in Nigeria. Income from leasing, containers, non-freight operation, or any other incidental income liable to tax under Section 9 of CETA. Then what are the incomes that are exempted from Nigeria in respect of these companies that are foreign and sea transport companies? Income exempted are those in respect of passengers, mails, livestock, or goods which are loaded en route outside Nigeria but terminating in Nigeria, and in transit in Nigeria that are brought to Nigeria from transshipment or connecting flight. Let me make use of it. A good example of it is, let me say, DHL, right? Yeah, DHL have a registered office in Nigeria. Let's assume DHL does not have a registered office in Nigeria, right? And DHL is making money from Nigeria. What are the income that will be subjected to tax in Nigeria from DHL? Any income that DHL is making from sending email, that is helping Nigerians to send email, to help them pick what do we call it? All those stuffs that we send now, documents that Nigerians will send from Nigeria to their foreign people abroad. All those kind of stuff, any income that they collect on those stuff is supposed to be subjected to tax in Nigeria. But now, what are those ones that are exempted from income tax in Nigeria? Number one, the ones that are exempted from income tax in Nigeria are the ones that they pick from another country and they are bringing it to Nigeria. That means they are going to deliver the letter in Nigeria, or they are going to deliver the goods or property in Nigeria. That means that kind of income, they did not generate it in Nigeria. They generated it in another country where they are picking it from. So that kind of income is exempted from tax in Nigeria. Another one that is exempted from tax in Nigeria are the ones at which they pick a letter, or they pick something from let's say, for example, from USA, and then the final destination of that letter is like Ghana. But before they get to Ghana, they will first land in Nigeria. And from Nigeria, they will now separate all those stuff and now send the one to Ghana. That kind of items is also exempted from income tax in Nigeria. So what are the ones that we are going to be subjected to tax in Nigeria? They are going to involve the ones that they are sending from Nigeria, or they are loading passenger into their aircraft in Nigeria. Just like all this airline also, they are picking passenger from Nigeria to fly them from Nigeria abroad. Those income that they generated from loading people from Nigeria, loading passengers from Nigeria into their aircraft, is going to be subjected to tax in Nigeria. Whereas they are flying someone from Qatar, they are bringing that person into Nigeria as the final destination. That income will be subjected to tax in Qatar and not in Nigeria. And also, they are flying somebody to Benin Republic. But before they will get to Benin Republic, they will first touch land in Nigeria before they now move. All those kind of income will be exempted from income tax in Nigeria. I hope that is clear, and I hope my voice is not cracking, and I hope you are following, please. It's been long I see them test this specialized business in the exam, actually. It's been long, very, very long time that they tested it in the exam. But we never know. You cannot predict, I can. And you never know what they can do. Okay. What is the computation and assessment of profit liable to tax? The determination of profit or loss derived by a foreign company in respect of loading of passenger, mails, livestock, or goods into an aircraft or a ship in Nigeria is based on the rules explained below. Otherwise, FRS shall compute on a fair percentage on the full sum receivable in respect of the carriage of passenger, mails, livestock, and goods shipped or loaded in Nigeria. What are those stuff that you need to be applying when it comes to determination of tax of all these kind of foreign companies that are into the airline business? Adjusted profit and depreciation ratio basis. This basis is adopted where the FRS is satisfied with the tax that the tax authority of the foreign company's country of origin has computed and assessed a company which operates ship or aircraft on a basis not materially different from that prescribed by CITA, Company Income Tax Act. And also they are satisfied as being applicable to a company in the air or transport business. So that means before FRS is going to be making use of this one that we wanted to do today, the method we want to do, they must have been satisfied that, oh, this foreign company that is doing business in Nigeria, where they are operating, where they have their registered office, FRS must be satisfied that, oh, the tax authority in that country, they have specifically carried out their own due diligence, carry out their assessments, carry out their computations based on what we have in our Company Income Tax Act that is very, very similar to them. And also they can be satisfied that, oh, this stuff is applicable to in the air or sea transport business. So what you are going to be doing, you are going to be doing the adjusted profit ratio, and then you are going to be doing some depreciation ratio. In order to determine the assessable profit, capital allowance, and consequently the total profit chargeable to tax in Nigeria, Federal Inland Revenue Service applies the above ratios against the income derived from the foreign company from the loading of passengers, mails, livestock, and goods into an aircraft in Nigeria. Also, apart from doing the computation of the tax liability, FRS is also going to do minimum tax computations. And the minimum tax should not be less than 2% of the full sums receivables in respect of the carriage of passengers, mails, livestock, or goods shipped or loaded into an aircraft in Nigeria. So, what's the relevance of this minimum tax? They are not going to compare the tax that they computed and the minimum tax. Which one is the higher out of the two? If the minimum tax is higher than the tax that was computed, then that means the minimum tax is going to be the tax liability of such a company in Nigeria. I hope that is clear, and I hope you are communicating. So please, I hope I'm not alone. I hope we are still together. I hope I'm not alone. Okay, thank you. So let's quickly look for a question under this that we are going to treat. Okay, I think there is one note that is sent to us in our various groups. I think there is one note that is sent to us in our various groups. So let me quickly read through that note, and let me quickly read through the notes. I think I typed it here about or something like that, yeah. So steps in computing the taxation of specialized business in Nigeria. Let me see whether I can copy this and paste it around anywhere so that I can quickly run through it. But please, I think I'll share it with us. So please. Oh, I cannot edit here. Wow, 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 wow. Okay, I'm sure you can see the steps in computing taxation of specialized businesses. I'm sure you guys can see it, right? Please confirm you can see what I'm sharing. Okay, good. And I hope my voice is not cracking also. Thank you. So, steps in computing taxation of specialized business. Number one, step one is to identify the global income of the company. Step number one, identify the global income. What is global income? That means the total income that they made worldwide. That is what we mean by global income. Step two is to identify the Nigerian income. What is that Nigerian income? This is derived from the carriage of goods and passenger into a ship or an aircraft from Nigeria. Into a ship or an aircraft from Nigeria. The next, step three, is to compute the adjusted profit ratio. You need to compute the adjusted profit ratio. What is the formula that you are going to be using to compute the adjusted profit ratio? All those ones, when we are solving a question, we are going to be seeing them properly. And actually, the global adjusted profit, right? Determine the global adjusted profit. The global adjusted profit is exactly how we used to do adjustment of profit. The net profit reported, and we add back disallowable expenses. We add back disallowable expenses. That's going to be how we are going to be determining the global adjusted profit. Then step four is to compute the adjusted profit ratio. So what is the rate that we are going to be using to compute the adjusted profit ratio? It's going to be the global adjusted profit divided by the global income. Global adjusted profit divided by the global income times 100%, please. Global adjusted profit divided by the global income times 100%. So immediately we arrive at the adjusted profit ratio. The next one is to identify the global depreciation charge in the account. What is the global depreciation charge in the account? Okay, to get the depreciation ratio, that means what we are calling the depreciation ratio. There are some times that FRS is going to agree depreciation ratio with them, and you can have some instances that FRS will say that, okay, make your depreciation ratio to be a certain percentage of the company's depreciation figure. They can give them such an information. So once we are done with that, the next thing is to now get our depreciation ratio, and that depreciation ratio is going to be the global depreciation divided by the global income. The global depreciation divided by the global income times 100%. That one is also going to be in percentage. The next one, which is step 7, is to compute the Nigeria adjusted profit. So what's the formula that you are going to be using to compute the Nigeria adjusted profit? You are going to be making use of the global adjusted profit ratio times the Nigerian income, times the Nigerian income. Then step 8 is to compute the capital allowance for Nigeria operation as follows. What is the capital allowance? Capital allowance is going to be depreciation ratio times Nigerian income. That means the depreciation ratio that you get from step 6, you are going to make use of it in step 8 to get the capital allowance, depreciation ratio times Nigerian income. But I put a note here that please note, where the examiner gives instructions as regards the computation of capital allowance for Nigerian operation, that information is going to supersede these above computations. That means, so if the examiner should say that, oh, make use of this particular percentage as your capital allowance, that means that percentage that the examiner stated, that's what we are going to be making use of to get the capital allowance. So after step 7 is to do step 8, step 9, sorry, I think I mentioned step 8. Step 9 is to compute the taxable profit from Nigeria income tax purposes by deducting step 8 from step 7. So capital, the Nigeria adjusted profit minus Nigeria adjusted profit, which is the step 7, minus the capital allowance, which is the step 8. So that is going to now be your taxable profit. Then the next one is for you to apply the prevailing tax rate. You are going to apply the prevailing tax rate, and also you now compute the minimum tax liability. Sorry, I didn't write that one there, but when I'm solving question, we are going to do it. So the minimum tax is going to be 2% of the Nigerian income. 2% of the Nigerian income. That is going to be our minimum tax stuff. So we are not going to compare which one is higher between the two. The one we did in step 9 or the 2%. So whichever that is higher between the two, that is going to be that's going to be the company tax liability as it relates to the question. Please, I've dropped a note of this for us in our respective groups, but I'm not sure if this thing was well written. So I'm going to work on this, right? Please, I'm going to work on this, and I'll try and send a proper one to us, please. I'll try and send a proper one to us. I'll save it in PDF so that it won't scatter. So I'll try and send it to us. Thank you very much. So let's quickly go through the questions. You mean the minimum tax? Yes, now the minimum tax. Let's quickly go through a question, and let's try and see how we can manage the time. and do our best. Okay, this illustration, Chief Boni Shizaram. Chief Boni Shizaram is the chairman and CEO of Shizaram Group of Companies. The conglomerate operates in several states of Nigeria. The group's area of business interest spans across supply of building materials, transport, and banking. In 2012, at the instance of the chairman, the group decided to diversify its business into some African countries by floating Obi Airlines Limited, which was incorporated in Ethiopia. Okay? On May 25, 2016, as Chief Shizaram was in the executive lounge of Murtala Mohammed International Airport, Lagos, awaiting departure, he met his longtime friend and his business colleague, Chief Roger Menkiti, who is also an entrepreneur. During their discussion, Chief Menkiti wanted to know how beneficial it would be to him should he decide to invest in Ethiopia. His areas of concern are mainly companies' income tax and tertiary education tax payable in Nigeria, assuming he decided to start an airline business in Ethiopia. Meanwhile, the financial results of Obi Airlines Limited for the year ended December 31, 2021 are as follows. We have income from passenger flights on other routes, income from cargo loaded into aircraft on other routes. We have income from passenger flights from Nigeria. We have the income from cargo loaded into aircraft from Nigeria, and we have the three different figures for them, and we have the total to be 536,288,205 naira. When we have these following expenses, we have depreciation, we have staff salaries, we have general provisions, and we have the other expenses. Everything total like 17,143,056, and they deducted it from that income that they made in the business. We have 519,145,145 naira as the net profit. Then additional information were given as follows: that capital allowance were agreed with the relevant tax authority at 110% of the depreciation charge. Don't forget the information that was reading in those steps, that if the tax authority should specifically stated the rates that you are going to use for your capital allowance, that means that rate supersedes what you are going to be getting is this step 7 of step is this step 7 or step 8 or thereabout? Step 6 or step 7 or step 8 thereabout. Okay, then they gave us another additional information that other expenses include disallowable expenses of 425,000 naira. As the tax consultant, you are required to prepare computations showing the following: A, total profits of Obi Airlines Limited for Nigerian tax purposes. B, company income tax liability for the relevant year of assessment. And C, tertiary education tax liability. Tertiary education tax liability. Please, a minute, please. So When you are solving this question, I said that step 1 is to determine the Nigerian global income. Those are the relevant steps that I gave to us. Identify the global income, identify the Nigerian income. I would have loved to ask us, which one is the Nigerian income out of these 4 incomes that we have in this question? Which one is the Nigerian income out of it? Is it the whole 4, or the last 2, or the first 2, or number 2 and 3? Which one do you guys think is the Nigerian income? You can just quickly type your information. Let me see where that. Okay, somebody said the last 2, the last 2. I'm breaking you. Am I still breaking again? This person said I'm breaking. Oh. Okay, thank you. Somebody said I'm not breaking again. Are you sure it's not your own network? Because I've used this stuff to receive class today and it didn't break at all. Are you sure it's not your own network, please? So the Nigerian income from this income is going to be the last 2. Please take note. The last 2 income that we have in this income, they are going to be the Nigerian income as per the question. So we are just going to work it out as fast as we can. So please take note of the question. Let me see whether I can share my Excel sheet. I'll try and see if I can share my full screen. I'll try and quickly solve this question. I'll move to another topic. Anywhere we end today, we end today. Please. I still promise to solve. If somebody came to my DM, I promise to solve carry back of capital allowance. I promise to solve the question on it. And I think another person, those minimum tax computation, dividend basis, gross turnover basis, blah, blah, blah basis. I promise to solve a question on it also, please. Yeah, I'll try and fix a date. We still have time. Yeah, we still have time. We'll try and fix a date where we'll solve all those questions so that everybody can have a proper understanding of what we need to do. And then, yeah, I think that's all I can say for now. Okay, thank you. So let me share my full screen, hopefully. Okay, so we'll be juggling through this question. I would have loved to even share the steps also. Yeah, let me be working with history like that, right? But I just hope it won't be confusing us, though. I hope it will not be confusing us. Okay, what is the requirement of this question is to the total profit of OB Airlines Limited for Nigerian tax purposes. Then the company income tax for the relevant year of assessment. The first question, what is the relevant year of assessment? What is the relevant year of assessment? If the year ended, if they gave us that, oh, this year ended December 31, 2021, what is the year of assessment? Just type. What is the year of assessment? Just type it if you know it. Okay, good. Thank you very much. 2022 year of assessment, because it's going to be on preceding year basis. By now, nobody should be making mistake with year of assessment for companies. By now, don't let that mistake happen, please. There shouldn't be such a mistake, please. Thank you. So we are solving for OB Airlines Limited. Let me try and see if I can increase the font. Okay, I believe this should be good. Okay, 120% should be good, right? 120% should be good. Total profit of OB Airlines Limited for Nigerian purposes. Okay. Computations of total profits for the company for computation of total profit for Nigeria tax purposes. Nigerian tax purposes. So let me create my currency. Please, currency, very, very important. Currency, very, very important. Anything they give to you, please make sure you give to them. Okay. So let's go through the steps, right? Let's go through the step. Step one is to identify the global income of the company. Okay. Step, no, don't let me be writing the step. Global income. What is the global income of the company from the question? The global income of this OB Airlines is this figure, 536,288,205 naira. Okay, 536,288,205. Please, you close this figure. Okay, you close this figure. Now, the next one, step two. What is that step two? Identify the Nigerian income. And this is derived from the carriage of goods and passengers into aircraft or ship from Nigeria. And from the best understanding, the last two is going to be the Nigerian income. The last two is going to be the Nigerian income. So the Nigerian income, that one is going to be 54,401,275. Please let me just copy it, please. Plus the other one, which is 49,938,180. Those are the Nigerian income. So we add them together. 54,401,275 plus 49,938,180. So we have this Nigerian income to be 104,339,455 naira. So what is the next step? Is to determine the global adjusted profit. The global adjusted profit is the same thing with what we have been doing before. Okay, computation of global adjusted profit is not something that is different. Is you pick your net profit reported, you add back the salable expenses less non-taxable income, depending on the relevant information that you have as per the question. So net profit reported as per the question. Where are you? Where's our net profit? Okay, 519,145,149. That is the net profit reported as per the question. Then we'll do what? Add back disallowable expenses. Disallowable expenses. Add back disallowable expenses. What are the disallowable expenses from this question? Number one, depreciation. Depreciation. What did I do? Depreciation. And how much is this depreciation? 1974125. I hope you all agree depreciation is a disallowed expenses, right? Please, if you do not agree, quickly raise up your hand though. That depreciation is not a disallowed, is an allowed expenses, please. Okay. General provision. So let's go to additional information. What did they give about the general provision for bad debt, for doubtful debt? General provision for doubtful debt. They call it already general provision. And what did I say? We are going to do what? Disallow it. The ones that we are allowing is the specific provision. And I also told us that if they put allowance for doubtful debt and they didn't mention which one is general, which one is specific, don't waste your time. Disallow it. So general provision for bad debt. General provision for bad debt, we disallow it, right? Then which of the other one? I think there's other expenses included disallowable expenses of 425,000 naira. So other expenses disallowed. Other expenses disallowed, 425,000 naira. Other expenses disallowed, 425,000 naira. Let's look at it again. Hope nothing is left. Hope we click. I believe this is all, right? This should be all. This should be all. Okay, good. So what do? You come here, add it up. This plus this. We're having 521,759,324. 521,759,324. This is now our global adjusted profit. This is our global adjusted profit. So we are done with that step 3. The next one is step 4. What is that step 4? We need to compute the adjusted profit ratio, APR. Compute the adjusted profit ratio. So let me bracket it, APR, adjusted profit ratio. What is the formula to do the adjusted profit ratio? I said the stuff for adjusted profit ratio is going to be the global adjusted income divided by the global adjusted profit divided by the global income times 100. The global adjusted profit divided by the global income times 100. What is the global adjusted profit? The global adjusted profit is 521,759,324 divided by what is the global income? The global income is 536,288,205. 205, right? Times 100%, times 100, and it's going to be in percentage. Okay, and it's going to be in percentage. So what do you get when we do this? Some this divided by this times 100. What do you have? Let me approximate it to the nearest whole number, please. Nearest 2 decimal places or 1 decimal places. Okay, so that means our APR, adjusted profit ratio, is going to be 97.3%. Okay, our adjusted profit ratio, adjusted profit ratio is 97.3%. So we are done with step 4. We are done with step 4. What is the next one? Step 5. Step 5 is now to identify the global depreciation charge in the account. What is the depreciation that was charged in the account? That is the step 5. The global depreciation. The global depreciation is this 1974125. That is the global depreciation that was charged in the account. That is step 5, right? So the next one is step 6. Step 6 is now for us to identify the global depreciation ratio. And for us to do the global depreciation ratio, step 6 is global depreciation ratio. Global depreciation ratio. What is the formula for us to do the global depreciation ratio? We are going to be doing the global depreciation divided by global income times 100. Please permit me to put it here so that I will manage the space. Okay. The global depreciation divided by global income times 100. So the global depreciation, that one is 1974125 divided by the global income. The global income is 536,288,205. I hope we are still together. Hope my network is not breaking. Okay, times 100 times 100, and it's going to be in the percentage. So what do we have? Going to be this divided by, where is this global income again? This, right? Close the bracket, times 100. What do you have? We have is 0.37%. So let me just approximate it to one whole number. So we are going to use 0.4%. So my global depreciation ratio, my global depreciation ratio is 0.4%. My global depreciation ratio is 0.4%. So I think that is step 6, right? That is step 6. The next one is step 7. The next one is step 7. Is for us to now compute Nigeria adjusted profit. Okay. Compute Nigeria adjusted profit. That is the next one. We need to compute the Nigeria adjusted profit. So what is the formula to do the Nigeria adjusted profit? We are going to be making use of the global adjusted profit ratio times the Nigerian income. Global adjusted profit ratio times the Nigerian income. What is our global adjusted profit ratio? That one is 97.3%. Okay, that's going to be 97.3% times what is the Nigerian income? The Nigerian income now is 104,339,455. So let me be writing it out and I'll just show my stuff there, right? 97% times Nigerian income. What do we have? We have 101,522. Please let me make it to nearest phone number, please. 101,522,290. That is step 7. That is step 7. The step 8 is now for us to compute the capital allowance for Nigeria operation. Capital allowance for Nigeria operation. Compute the capital allowance for Nigeria operation. And what we are going to be using supposed to have been the depreciation ratio times the Nigerian income. That means the depreciation ratio that we get, where is it, please? The depreciation ratio that we get here, this is 0.4%. That's what we should have used times the Nigerian income. But in the question, they specifically stated that capital allowance were agreed with the relevant tax authority at 110% of the depreciation charge. And I told us that, okay, once you see all this kind of information, that once the examiner, they specifically mention the ratio that you are going to be using to get your capital allowance, is that one is going to supersede the whatever you get in step number 6. That means in this kind of information, they have given us the ratio. In this kind of question, they have given us the ratio to use to get our capital allowance. They said that we should do 110% of the depreciation. This information have made step number 6 to be irrelevant. We are not going to be making use of that what we get in step number 6, which is global depreciation ratio. We are not going to be making use of it to get our step number 8. Please take note of that. We are not going to be making use of it to get our step number 8. So now, what is going to now be the capital allowance? The capital allowance now, capital allowance will be will be 110%. 110% of what? They said that we should make use of capital allowance to be, where's that question again, please? 110% of the depreciation charge. 110% of the depreciation charge. So 110% of 1,974,125. So whatever we get, that is going to be our capital allowance. Okay, 110% times, where is that depreciation figure? Yeah, I think this is it here. So let me make this also to the nearest figure, right? So my capital allowance for the Nigerian operation, which is now step 8, is going to be 2,171,538. So the last step, which is step 9, is for us to compute the taxable profit for the Nigerian income tax purposes. Taxable profit for the Nigerian income tax purposes. Now, what is going to be the taxable profit of Nigeria income tax purposes? As said, we are going to be doing step 7 minus step 8. This is step 7. This is step 7 minus step 8. Step 7 minus step 8. So the taxable profit will be the Nigeria adjusted profit minus the capital allowance. So the Nigeria adjusted profit, that one is oh no, what did I press? The Nigeria adjusted profit, that one is 101,522,290 minus, what is our capital allowance? 2,171,538. So let me show you by this side here. It is going to be this minus this. So the Nigeria, the tax, according the taxable profit now is 99 million. So the taxable profit is 99,350,752. 99,350,752. So now what is going to be the tax liability? The company income tax liability. What is the year end of this question again? The company income tax liability for 2022 year of assessment. For 2022 year of assessments. So the CIT is going to be 30% of the taxable profit. 30% of the taxable profit. That's going to be the CIT, which is going to be 30% times 99,350,752. And what are we going to get in that aspect? 30% times this taxable profit. We are having 29,805,266 naira. Then we now need to compute the minimum tax. minimum tax liability. And we said that the formula for the minimum tax is going to be 2% of the Nigerian income. 2% of the Nigerian income. 2% of the Nigerian income. Okay, so what is the Nigerian income? I think 2% times, where's the Nigerian income? It should be from the beginning. 104, 104, 339, 455. So 2%, 2% times this. So we have 2 million. For that, we have 2 million, blah, 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 2 million, and this figure. Okay. So now what is going to be the company tax liability? Definitely the tax liability for OB Airlines Limited, for 2022 YOA, year of assessment, is 29,805,226. Since it's higher than the minimum tax computations. Finish. We are done with A and B. So let's go through the last one. They said that tertiary education tax liability. So what is the rule on tertiary education tax liability? Any company that is not registered in Nigeria, any company that does not have any resident office in Nigeria, is exempted from paying tertiary education tax. So let's look at it. OB Airlines Limited, does OB Airlines Limited have any registered office in Nigeria? From the question, I cannot see anywhere that they said that OB Airlines Limited has a registered office in Nigeria. They just said that the guy is operating from Ethiopia. So what's going to be the answer to this last one? Okay, to the C part. The tertiary education tax, please, I'm just going to write it. The tertiary, I hope this is correct spelling, the tertiary education tax, for OB Airlines Limited will be nil, as the company is not resident in Nigeria. The company is not registered in Nigeria. The law, that means the tertiary education law, the law states that only company resident in Nigeria are liable to pay the tertiary education tax. Simple and straightforward. So please let me see, do we all have any questions? And I hope we are still together. Please, do you have any question, please? I'm sure there shouldn't be any question. You still ask question? Okay, oh yeah, let me quickly pick some questions. Don't let that hand to be too much. Oh yeah, how many people?
Why are you afraid of question when you say they should not let the hands be too much, sir?
So that the hand will not be paining them.
My brother, very funny in this, sir.
Okay, Michael.
It's very funny indeed.
Michael Shimamanda.
I have a question. the tertiary education tax, is it
Yeah.
3% or 2%?
Presently now, is it not 3.5%? I'm not sure, but I know it's no longer 2.5%. It's either 3% or 3.5%, but it will be given to you
It's
in the example.
3%.
Is it still
Okay.
3%?
Yes,
Yeah, the
3%.
EDP
It's
is
3%, following by the
now.
2019 finance start. 3%.
Yeah, okay. So it's agreed that it's 3%, but I'll still confirm it also. But I believe that my brother should be saying the correct thing. Maybe he's a tax practitioner, but they are going to give to you the tertiary education tax that you are going to use, and the company income tax also. They are going to give it to you in the question. They'll give to you the capital allowance rate. Yeah, they'll give it to you the capital allowance rate, and they also state your progressive tax rate, first 300, 500, 1.6, 3 point, over 3.2. They are going to state it for you. Thank you. I will say innocent.
Good evening, sir.
Good evening, sir.
Yeah, in this my first question, this my tax specialist. This question does it. What about if there's a question that says income that let me say like income from cargo loaded into aircraft from other routes? Is it a Nigerian income or a global income?
Income what?
Income that from cargo loaded into aircraft to other routes, as the income from that goes to other routes. Is it Nigerian income or
once they are loading it from Nigeria?
No, they didn't specify. They didn't specify. They say income. Say income passenger fly on other routes. Is it Nigerian income or global income?
If they say other routes, I don't think it's a Nigerian income. That means they might just land in Nigeria as a what do we call it? Is it a connecting flight or something? I've forgotten that word. Connecting flight or clinical, and they will now from Nigeria go to the final destination. That one is not going to be a Nigerian income. I hope it's clear, sir.
Yeah, it's clear.
Okay. Inwadike Joy.
Good evening, sir.
Good evening, ma'am.
Please, sir, can you send the workings after lecture on the platform, because I stopped seeing the screen on step 7, please.
No, definitely we'll share the stuff now.
Same here, we didn't see the screen more.
You didn't see the screen, Ke?
And also the question,
No,
sir. You did not drop the question.
The screen is not
I
showing
stopped
again.
seeing it on step 7.
Yes, we start seeing step 7 too yet.
So please, after the lecture, kindly help us and send it.
Yeah,
The
apologies
workings.
for that too. Apologies for that.
That is the disadvantage of muting.
Even the
yeah.
question, you did not drop the question in the group chat.
Are you serious?
Yes, you didn't drop the question.
You sure? Let me check. That can be now. What happened?
Azauna.
Let me check very well. Let me check.
The question is not in the group chat. It's not in the group chat.
Is now or is not?
It's not.
Don't be angry. Let me see.
Happy customer week.
But you guys are seeing a happy customer week to use that. But which customer are you? But you guys can see the screen that I shared. I don't work in Banco. Oh,
Amanda is working in Fidelity Bank.
Please let me quickly look for the question. Oh, apologies, please. I'm giving you guys bonus. I'm sharing the word and the one in Word, and let me just quickly share it. Apologies for that.
Okay, it's all right. Apologies accepted.
Thank you, sir.
Azavna, I don't understand.
It's
If
Thank
you
you,
not
sir.
accept, who want class? If you not accept, the class don't finish with that now. I don't
Abi,
understand.
you guys should just tell me to stop. That you guys do not agree. Please let me quickly share the question with us, please. Think the best times 3, the best times 1, the best times 2. Okay. Yeah. Oh, so sorry, Prince Olushola. It has even complained that I didn't no question in the group chat. Apologies, Gary, please. I'm so sorry for that. Yeah, I've dropped it to the lawyers among us. Please, I apologize. It won't happen again. It's small boy that was doing me. Thank you.
Cinema.
Thank you, sir. I've seen it.
Okay.
That's a good one.
Oh, you guys said you didn't see the screen, but do you guys understand? Do I need to quickly run through? Do I need to quickly run through, please?
Yes, from step 7. Yes, sir. From step 7.
Some
Okay,
of
no
us
problem.
saw the screenshot.
Yes, sir.
I don't know why
Yes, sir.
some
You can
didn't.
run it again, too,
Maybe
sir.
it's network.
Okay, let me quickly run it, but I will meet everybody. Oh.
I'll start from
Miami
beginning.
17 Osiamo.
Don't worry, I'll quickly run through it.
Run through it again.
Okay, so good. Thank you. Let me quickly run through the solution again, and I believe you guys can see the screen now. Okay, we follow the steps, step 1 to step 9. The step 1, 2, 3. That one is straightforward. Compute the global income, the Nigerian income. We got that. Then we did the adjustment of the profit, doing the global adjusted profit. That means we are adjusting the profit that they made globally by doing the net profit reported globally, and we add back disallowable expenses. We did that one. That one is our global adjusted profit. Then we now work out our adjusted profit ratio. So what is the formula for the adjusted profit ratio? Is the global adjusted profit divided by the global income. So we pick the relevant figures, the global adjusted profit that we got divided by the global income, right? We got our adjusted profit ratio to be 97.3%. Then the next one is for us to pick what is the global depreciation. We pick the global depreciation from the question, which was 1974125. And there we now got our global depreciation ratio, which is step 6. And we said that the global depreciation ratio is 0.4%, making use of this formula that, okay, global depreciation divided by global income times 100. But if you look at that step, okay, let me just leave that one for now. Then we now move to step 7, which is to compute the Nigerian adjusted profit. What is the formula to compute the Nigerian adjusted profit? It's going to be the global adjusted profit ratio, which is what we get in this place, global adjusted profit ratio times the Nigerian income. Global adjusted profit ratio times the Nigerian income. We got that one, which is this figure. We did this 97.3%, which we got in step 5 times step 2. Step 5 times step 2. The global Nigeria adjusted profit, we are able to get that 101,522,290. Then the next one is for us to do the step 8. And that step 8 is to compute the capital allowance for Nigerian operation. And in the notes that we read, that Excel sheet that we read, we said that, okay, the capital allowance that we should have made use of should have been the depreciation ratio times the Nigerian income. Our capital allowance should have been the depreciation ratio times the Nigerian income. But there is a clause there. There is a clause. I'm sorry, I need to drop that stuff for us. Maybe after this class, I'll drop it. Okay. There is a clause there. The clause says that if the examiner specifically stated that, oh, let the depreciation ratio, let your capital allowance be a so and so percentage of this, you are going to be making use of that. That means if you are going to be doing that, you are not going to be doing, what you get in step 6 will be irrelevant. So that means our step 8 now, they specifically gave us in the question that, okay, we should make our capital allowance to be 110% of the depreciation. 110% of the depreciation that was charged. So we now solve out our step 8, because this information that we have in the question have supersedes what we are supposed to do by making use of step 6 figure, the global depreciation ratio. So this information has superseded it. We did the 110% of the capital allowance. We got this figure. Then the next one is for us to compute the taxable profit for the Nigerian income tax purpose. So what is going to be the taxable profit? Your step 7 minus step 8. What is step 7? The Nigeria adjusted profit minus the capital allowance figure that you get. That is going to be your particular figure. Then we worked it out, 101 blah 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 minus the capital allowance. We got the taxable profit. Then we now did the computation of the income tax liability for the relevant year of assessment, which is 2022. 30% of this taxable profit, we arrive at this figure. Then we said that, okay, we are also going to be doing minimum tax liability. We are also going to be computing the minimum tax liability. So what is the formula for the computation of minimum tax liability? It's now going to be 2% of the Nigerian income. 2% of the Nigerian income. So we did 2% of the Nigerian income, which we have in up here, and 104 million, blah, blah, blah. We got 2,086,789. Then we now look at, okay, which one is higher? Definitely, I'm sure you will not be expecting the tax authority people to tell OBLN to go and pay the one that is lower. That one is not going to be possible. I've never seen it before. Okay? So that means we have to pick the one that is higher, and we write a short note there that, okay, the tax liability for OB Airlines Limited is going to be 29 million, blah, 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 since it is higher than the minimum tax computation. Then the last aspect of the requirement is that, okay, what is the tertiary education tax? And we look at the question, we said that, okay, by the virtue of the law of tertiary education tax, is tertiary education tax exempted companies that are not resident in Nigeria, that they don't have any registered office in Nigeria. It specifically exempted them from payment of tertiary education tax, which is the information that I wrote there that, okay, tertiary education tax will not be remitted to Nigeria. So I hope that is clear. I hope that is clear. Somebody said I have a question, but not on this topic. Please keep that question. Keep that question for now. Maybe when we are done, I will quickly listen to everybody. I'll quickly listen to everybody. Okay. I have no more questions. I've unmuted everybody. If you have any question, please, you can go on and ask your question.
Good evening, sir.
Good evening, ma.
Yes, sir. The depreciation. You know, when we are reading the, we'll have read the question and we'll have know that they said, so do we need to compute the depreciation? That, and we know that, we already know that we are using 110 of depreciation. So do we need to still compute it? Is there any mark awarded, or we don't even need it? Since we know that we are using 110.
I will advise you to compute it too. So that if there is any mark for it, the mark will not, they will not cancel you out for the mark.
Okay, sir. And that 2%, what are they using it for?
Minimum tax liability.
Okay.
Yeah. So it's just to compare. If the computation of the minimum tax is higher than 30% of the taxable profit, so that means what the company is going to pay is the minimum tax. I hope it's clear, ma.
Yes, ma. Yes, sir. Thank you, sir.
Okay, no problem. No problem. Who is it? I can see somebody else raising hand. Sarah. Sarah.
Yes, good evening, sir.
Good evening, ma'am.
Thank you very much for this class. So my question is, all these steps, is it that we are going to code the steps in our head, or there is maybe there is somewhere they are going to
You know it too. But sincerely, sincerely, it's been long they ask question on this taxation of specialized business. It's belong. It's belong. It's belong. It's
So
belong. I don't know. You know, I don't know. I'm not the person that's writing question. So in case if they should go, if they should, if they should go and write, test it, and I tell you that don't worry yourself. You not get to the exam, you not saw it, you not say, and it's that boy that caused it too, that you'll have done that one. So,
Sir, but the step is too much, sir. The step is too much now.
It's very easy now. Once you practice like twice, you remember it.
Wow.
Once you practice like twice, you remember it. Please, are you guys having any question, any class by 8? Do you guys have class by 8? Sorry, by 9 p.m. Sorry, I said 8.
FM.
Yes, we have FM.
Oh, okay. That means we are going to stop here. I was thinking there is no other question, no class. I would have loved to complete the other one. So I think I've shared the question with you guys. So the other one, that person that asked me that question, when we did them, I think it's Mr. Innocent. The question that you asked me, I think this illustration, the next illustration is going to handle that for us. The next illustration is going to handle that for us, which is going to be basically next week. So please, I know I'm owing you guys some computations, stamp duties. Yes, until Olamide, I know. I know I'm owing you guys stamp duties and which other one? Stamp duties. I want to do carryback of capital allowance. I want to show it for you guys. Then I want to show you guys what do we call it? How to do the minimum tax liability for companies. That means companies that have been operating for 4 years and above. Apart from you computing their 30% of the taxable profit, you are still going to be doing the minimum tax computations for them. So what are the relevant figures that you are going to be making use to do it so that everybody will have a proper understanding of it? Yes, I will share the solution of this question. Yes, I will share it, Madam Mary. I will share it with everybody in our relevant groups. So please, I want to beg us, please, that group, I'm sure this is the only group that is open for you guys to be dropping chat. Please, and please, anything you want to ask, let it be on tax-related stuff. Anything you want to ask, let it be on what we are discussing. And also, any chat, how are you? How is your family? How is your mother? How is your girlfriend? Please don't come and bring it to that group, please. Anyway, any group that I saw it, you can see immediately I'm always restricting everybody from commenting. Please let us just keep it professional and let us make it very, very matured. So please, and please, can we solve more questions on this topic in the next class? We still have more topics to solve, Jare, Mr. Prince Adewale. We have more to solve. Don't worry, we are going to solve more. So,
sorry, sir.
Oh, you have a question?
Please, can you share this video as soon as possible, please? Because the last video, I don't think they sent it. The one she did,
okay,
the last
you know
class.
What you do? You know what you do? That YouTube link that was shared, just go and click on it. It will take you to the video.
Okay, because I did, and I didn't know that was why. But I will do it again. Maybe I didn't take it right.
Maybe I will try and work on it. I'll try and work on it. You guys should not be angry, please. There is so many things to do, and we know we have to give you guys this class. Madam Eki Jennifer, you said you have a question, but not related to this topic. Can I quickly take it?
Yes, sir.
Okay.
Good evening, sir.
Good evening, ma'am.
Yes, sir. Is on trust, estate, and the settlements.
Trust, settlement, and estate. Okay.
Yes.
I hope the lecturer is online because I don't know it too. Oh yeah, go on.
Okay. Is this a question that I was solving? May 2019 question 4.
Okay.
So I got to a point that from the solution they had, I was the trust still fees remuneration was 200,000 in the question, but in the solution it was 260. That is one. The second one, the sharing formula they use, I don't know how they got it, because they have 3 children there, but the ratio was now 1/4. So I don't know how they got.
Can you share the question with me?
Okay.
Share the question with me. Let me look at it. For the trustee remuneration, are you sure there is no fixed and variable? Is there no information like that?
No, sir. I've checked. I didn't see.
There is no variable remuneration. There is no. Is the only fixed remuneration they mention in it?
It's only fees they mention.
Something is wrong with that question. If they are using 260,000 for me, different stuff. I think there should be fees. Maybe you can just screenshot the question. You can drop it in the group where you are, so you can private chat it to me. So I'll look at it.
Although I dropped the years, but I didn't drop the question in the group. But
just help me screenshot it.
Okay,
you know,
sir.
you have gone ahead of every one of us now. Maybe we
have
not reached there. We have not reached there, so we cannot answer you.
Okay, it was Miss Favor that taught us that one.
Don't worry, you can drop it. We'll look at it together.
Okay, thank you very much, sir.
Okay, no problem. So thank you guys. So we'll see you next week by God's grace. So
thank you, sir. Please tell me Favor to send us yesterday's class.
Okay, Super Bash.
No,
yeah, good evening, sir.
Okay,
she forgot.
Okay, she will share it.
She has not shared it. Thank you, sir.
Thanks for the opportunity given, sir. We really appreciate, sir.
Okay, sir.
Yeah, my question is, when are we going to commence our revision? Because I think time is going. It's not on our side anymore. I don't know if I'm speaking now. I mean, on a general ground, though.
Don't worry.
While we are going, we should be.
That one will be communicated to everyone.
Okay.
At least really before we can start revision, every other courses they must have completed their own. FM,
okay. Thank you very much.
FR, everyone must have completed their own before we start revision.
Okay.
Thank you very much. Will be announced. Yes. It will be announced. Definitely, Mr. Kabiru will announce to everybody.
All right. Well, I appreciate it. Thank you.
Okay, no wala. So thank you so much, and enjoy the rest of the evening. Bye-bye.
Good night, sir.
Somebody say FM postponed. This information is coming late to everybody has left now.
We should continue with the task.
I will talk to you later.
Yeah. Somebody's already talking to someone later. Kai. This information is coming so late. See, a good number of students have left. Yeah. Okay. Can you guys go? Okay, let me quickly spread it. They should let us do class. Okay. Let me quickly share it.
Please do. Let's have another question.
Let me quickly share that. Can they join the class back? There are no FM. Okay, a minute. Let me quickly try that. Okay, let me see whether a good number of students will come back, or if not, we might end the class. Apologies.
It will even not go well if they could not join back. It will cause another wala.
Okay.
Sir, please, you work on my own side so that I can be able to be seeing the screen.
I should work on your side.
Yes, sir. Because I'm not seeing the screen. So that if the lecture starts again, I'll be able to.
I don't see it now.
I'm not seeing it, so.
Are you sure? Is it only everybody?
Your network is bad. I think you should check your network. The screen has been on since, I don't know.
Is it my own network or our own?
Our own, because my own never went off.
We have been seeing the screen.
We'll be seeing the screen, like not for a time. I mean.
Okay, sir. Let me log out and join again.
Yes, try that
before you get feed up.
Okay.
Okay. Well, you can watch the video later on now. Was just that it is not fair. Okay, so let's quickly continue then. Let's have another question. Thanks so much to who shared that information for us. Thanks to the person. I can't see the name of the person again that shared that information that the class is postponed.
I think we should continue by 9:10 when they they will check the chat and they will see and come back. Let's continue, sir. Thank you, sir.
Okay. And if anybody should sue me for doing the class without them, they are
joining. No, the number is increasing.
It is increasing.
So let's give them some few minutes. I'm noting the names of people. See that, my brother, he doesn't want any legal problem. If anybody should sue me, I'll start calling the names of people that bring money for lawyer.
I can see it.
Okay, let's give them let's wait till 9 o'clock. But I've dropped the information for everyone in the WhatsApp group now. Why are they not coming back? I think I will continue. Thank you. Any legal thing, I'm a feel legal, but the legal, I'm a feel worry. I will not be so. We'll go down like that. We went to it. How do you know? Okay, so let's move on, please. Let's move on and the specialized taxation. And I'm sure you can see my screen and you can hear me clearly, right? Okay, good. So we just finished taxation on foreign air and sea transport organizations, companies. We just finished their own. So now let's quickly look at the other one, which is now what do you call it? Oh, this is too big. The taxation of foreign company engaged in cable undertakings, that is telecommunications companies, their own taxation. So where a foreign company is engaged in the business of transmission of messages by cable or any other form of wireless apparatus, it is accessible to tax in the same way as a foreign company engaged in air or sea transport business. That means, so the way you do the tax liability of the air or sea transport business, that is the same way you are going to be doing the computing the tax liability of the cable undertakings organization. That means the same step that we used is going to be the same step that we are going to follow for them. Please let me quickly share this step for us, please. Please. But I think I dropped it with us now. But let me quickly share it, please. Steps. Specialized business. Age group first. Let me start from 3. Let me quickly read up these steps. Okay, please let me quickly share it with everybody. Yeah, I think I'm dropping in 3. Let me put it forward to 1, 5. Good. Please, you can check your respective groups. I've dropped the notes. I've dropped the note for us in our respective groups. Okay, so now let's move on. So where a company is into the business of telecommunication, you are going to be assessing the company to tax following the method at which we do foreign or air transport businesses. So that means you are going to be looking at the income that they generated from Nigeria, right? And also you are going to be looking at any other ones, any other income that you can see that they generated it from Nigeria. That's where you are going to be looking at for. So the profits which are deemed to be derived from Nigeria are from the transmission of messages through its network in Nigerian to places outside Nigeria. Such cable messages originating from Nigeria are deemed equivalent to the shipping or loading of passengers, mails, livestock, or goods in Nigeria. So that means if I should pick up my phone now to use it to make a phone call, maybe I call an international number, or I use one international, all this what do they call all this phone that they have in their offices that will be showing as 020 blah blah blah, and think is that all these international numbers like that that they call it I've forgotten the name they call it one special names like that in then. So all those kind of companies, if they don't have a registered office in Nigeria and they are making income from Nigeria, then that means all those income that they are making from Nigeria is supposed to be subjected to tax in Nigeria. The same way we prepare the foreign and airline companies that are operating from Nigeria. So that means any calls that were made from Nigeria, any advert through their telecommunication apparatus, through their website link, or any other stuff that they are making from Nigeria to the outside world, they are going to be subjected to tax in Nigeria. That is what this place is actually talking about. Also, the way we did the tax liability, the steps 1, 2, 3, 4, 5, 6, 7, 8, 9, we are going to be applying it for all these kind of companies also. And also you are going to be doing the computation of the minimum tax liability. So thus as we have it, the minimum tax should not be less than 2% of the full sums receivable in respect of the transmission of messages by cable or any other form of wireless apparatus in Nigeria. So that means you are going to be doing the 2% of their minimum tax based on the Nigerian income that they have in Nigeria, and you do the exactly the way we solved for the OB Airlines. That's this exact way that we are going to be solving for this company. So let's quickly look at this question. I'll read as fast as we can. Pategi and Abu are brothers based in Hackenstown in New Jersey, United States of America. In 2009, the two brothers and 10 other African Americans incorporated a company called Pategi Telecommunications Limited, whose major line of business is telecommunication. The company has a representative office in Share, Kwara State, Nigeria. In year ended December 31, 2024, the following transactions were extracted from the books of account of the company. We have the number of units, number of minutes of telecommunications transactions. So from this, you need to be looking at, okay, which ones are going to be classified under income generated in Nigeria. Please take note. US to other part of the world, US to Nigeria, Nigeria to US, Nigeria to Canada, US to Canada through Nigeria. We have the figure stated for us in minutes. The figure stated for us in minutes. Then we have the following expenses. What are those expenses? The worldwide expenses incurred include the following. We have refurbishment, 7,150,000. We have rent, 1.1 million. We have depreciation, 25,991,563. We have salaries and wages, 4065188. We have other disallowable expenses, 9658,000. We have the administrative expenses, 4820750. 4820750. And we have the total figure. Then they now give us the average charge for messages applicable during the year under review is 50 cents per minute. And the applicable rate of exchange is 198 naira to $1. So you are required to advise the company on total tax liability for the relevant year of assessment. First question, what is the relevant year of assessment? What is the relevant year of assessment? I'm sure that's going to be 2025. That's going to be 2025 year of assessment. 2025 year of assessment. So that's the question. Let me quickly share my Excel sheet and we'll solve this question together. And we'll end this class here this evening. We know that, okay, we have some to cover. Thank you, everyone, for coming back. Don't forget, I said that, okay, the steps that we use for the foreign companies in air and sea transport is the same step that we are going to be using for this other one. But this other one is kind of a little bit different because the figure that we have stated, we are giving to us in minutes. So how do we convert the minute to currency? And doing the necessary exchange of the figure. So the name of the business is Pategi Telecommunications. Pategi Telecommunications. Is that limited there? Pategi Telecommunications Limited, and the requirement is what should do what? Complete the tax liabilities for the relevant of assessment. Okay, computations of income tax liabilities for 2025 year of assessment, 2025 year of assessment. So step one is to get the global income. So now what is going to be the global income? because the information that they are giving us on the revenue, the income that the company made, is in minutes. But when you scroll down, they gave us how much they are charging per minute. They said that they are charging 50 cents per minute. And they now also give us the exchange rate in Naira. So that means for us to get the global income, that one is straightforward. The global income is going to be the total minutes. The global income is going to be the total minutes times 0.5%, 0.5 cents, please, times the exchange rate of 198 Naira. Okay? So the global income is going to be the total minutes times 0.5% times 198 Naira per $1. So let me split it down. So the total number of minutes, 3,850 minutes. 3,850 minutes. I hope you are still together. I hope the network is not breaking. If I just say I should unmute now, the noise will be too much. I would have loved to unmute everybody. Okay, let me give us the freedom this evening. But please, don't turn my class to figures of commotion. So everybody is unmuted, but please, no noise. If you know you are in a noisy area, please mute your mic. Please mute your mic, so that in case if anybody is not seeing me or you need to bring my attention to something, you can quickly call. You let me know as fast as possible. Thank you for your understanding and cooperation. So that's going to be 3,850,000 times 0.5 times 198. What do you have? We have 381,150,000 naira. That is the step one. So the step two. Step two now is to get the Nigerian income. Nigerian income. So what is going to be the Nigerian income from this question? What is going to be the Nigerian income from this question? You can see that we have US to other part of the world. We have US to Nigeria. We have Nigeria to US. We have Nigeria to Canada. And we have US to Canada through Nigeria. Which one are they going to be subjected to tax in Nigeria? It's going to be these two.
3 to 5. 3 to 5.
Nigeria to US and Nigeria to Canada only. The number 5, it is like a transit. Okay? The number 5, it is not income from Nigeria because the call was made from US and the call is going to Canada, but they route it through Nigeria. So that means that call is from US. The income should be for US. So the only income that we are going to, the only minutes that we are going to be using to compute the Nigerian income is going to be the call that they made that originated from Nigeria. And we have just two, Nigeria to USA and then Nigeria to Canada. Those are those only two. Those are the only two. So the Nigerian income, that one is going to be 426,250 minutes. 426,250 plus 550 minutes, 550,000 minutes, right? The addition of the two times 0.5 cents times 198 Naira. 198 Naira. I hope this is clear enough. So the addition of this, let me just quickly add it up. 426,250 plus 550,000. What do you have? 976,250 minutes. 976,250 minutes. So that means the Nigerian income is going to be this times 0.5 times 198. So the Nigerian income is giving us 96,648,750 naira. That is step 2. Then step 3. What is step 3? Is the computations of the global adjusted profit. Computations of the global adjusted profit. So let's go through the question. You can see that this question, they didn't give us net profit reported. They didn't give us the relevant information that we are going to be using to be doing disallowable expenses. But they have expenses that the company has incurred. So I'm going to be solving this question in another format, which is going to be different from doing net profit reported, add back disallowable expenses, less non-taxable income. We are not going to be using that format. We are going to be using a different format to get our adjusted profit. What is that format that we are going to be using? We are going to be making use of the global income, and we are now going to be deducting any expenses that meet up with WREN. We are going to be deducting any allowable expenses, so that whatever we get, that is going to be the adjusted profit as per the question. I hope that place is clear. Please, if it's not clear, just hold on. Let me quickly solve. I will explain to you guys later. But I'm sure immediately as I'm solving, you guys will get it properly. Okay? So let me pick the global income. The global income is 381,150,000 naira. 381,150,000 naira. Then I will now say less allowable expenses. Instead of me doing Israelite journey, and the Israelite journey that I will have done, immediately I got the global income, I will have deducted all these expenses that I have here. Once I deduct the expenses that I have here, I will have my net profit reported. I will now be adding back disallowable expenses. So why do I need to be doing such a stressful route when another easy one can be done easily with the relevant information that I have? So based on these expenses that you guys are looking at, what are the expenses that you guys think should be allowed for this company? I'm sure refurbishment is a capital expenditure. I'm sure you guys should know that refurbishment should be a capital expenditure. Rentage of the office, this one should be allowed. Depreciation is disallowed. Salaries and wages is allowed. Then administrative expenses also should be allowed. So we have 3 items that we are going to allow as per this question. I have rent. I have salaries and wages. And I have the third one, administrative expenses. So please permit me, let me just quickly do another here, please. Okay, rent is 1,100,000, 110,123. Salaries and wages 4065188, 4065188. You can see all those ones are in naira, please. Then we have the administrative expenses 4820750, 4820750. Those are the expenses that we have. So what do? We add them and come and minus it from this man. So this minus this, we're having 371,164,062. This is now my adjusted. This is my adjusted profit, which is step 3. Step 3, adjusted profit. Moving on, step 4. What is that? Step 4 is to get the adjusted profit ratio. Compute the adjusted profit ratio. Compute the adjusted profit ratio. What is that formula for the adjusted profit ratio? The adjusted profit divided by the global income times 100. I'm sure we still remember that one. Or if you want me to still copy it, let me quickly copy it and paste for you guys. If you want me to still show you for you guys, right? Okay. So global adjusted profit divided by global income. So this is my global adjusted profit. My global adjusted profit is 371,164,062 divided by 381,150,000.
Oh, you're being that one too.
Please, mute, please. You guys should not be angry. I need to meet everybody. I don't want that noise. Times 100, and the answer is going to be in percentage. Okay, so what is going to be my figure for this? This divided by this times 100. So I'm having 9 points. Let me turn it to nearest whole number. 9.12%. So that's going to give me 97%. That is step 4. Step 4. So let's move on. Step 5. What is now going to be my step 5 is to get my depreciation. Okay. What is the depreciation in this question? The depreciation in this question is where are you? 25,991,563. So my depreciation is 25,991,563. The next one, step 6. What is step 6? Is for me to get my depreciation ratio. You can see that in this particular question now, they didn't give us that we should make use of what do we call it? We should make use of a particular depreciation. They didn't give us any percentage to make use of in this particular step 6. What happened? Okay, so the next thing is for us to get our step 6, which is the global depreciation ratio. And that one is going to be global depreciation divided by the global income. And just as I was saying before that, okay, in this particular question, it's different from the other one that we first solved, that they gave us that, oh, we should make capital allowance to be 110%. So that means our step 6 here will be very, very relevant, because they didn't give us any information that, oh, the tax authority agreed this and this with the company. So our global depreciation is going to be this divided by global depreciation divided by the global income. This is my global income, right? Times 100 times 100. Whatever we get, let me make it to the nearest whole number. So my global depreciation ratio is going to be 7%. GDR, global depreciation ratio, is 7%. That is step 6. Then the next one, step 7. What is now my step 7? Is to get the Nigeria adjusted profit. We are almost done with this question, please. Nigeria adjusted profit. What is that formula that we are going to use to get the Nigeria adjusted profit? It's going to be our adjusted profit ratio, which is the step 4, adjusted profit ratio, times our Nigerian income, times the Nigerian income, Nigeria income, which we are going to have it in step 2. Step 2. So what is going to be that? That's going to be equals to this 97% times 96, this figure. So we have 93,749,000. Let me make it to the nearest zero number. So we have gotten our step 7. Okay, the next one is step 8. Now, what is our step 8? Our step 8 is to calculate the capital allowance. So now our capital allowance now is going to be the global depreciation ratio times the Nigerian income. The global depreciation ratio times the Nigerian income. That is going to be our step 8. You can see this particular one, they didn't give us that, oh, let this thing be 110% of anything. So that means we are making use of, should I bracket it at the front? Let me just write it sharp so that everybody can understand. 7% times the Nigerian income. Where is that Nigerian income again? 96,648,750. I'm sure everybody will understand, please. 96,648,750. Okay, so 7% times the Nigerian income. What do you have? We have 6,765,413 naira. Then the last one is step 9. Step 9. The last step is step 9, is to now get the taxable profit. Taxable profit. And this one is going to be the Nigeria adjusted profit, Nigeria adjusted profit minus your capital allowance, which is simply step 7 minus step 8. Step 7 minus step 8. So that's going to be this minus this. This minus this. So we have how much? We have our the taxable profit to be 86,983,875. So we'll now do the company income tax liability. Company income tax liability, and that one is going to be 30% of the taxable profit. 30% of the taxable profit. So 30% times this. So we have the company income tax liability to this figure, and also the minimum tax. The minimum tax liability. That one is also 2% of the Nigerian income. 2% of the Nigerian income. 2% of the Nigerian income. That is that one. So 2% times the Nigerian income. This figure. So we have 193 to 750. So the company income tax liability for Strategic Communications Limited will be 26,095,163, which is higher than minimum tax computations of 1,932,975. Shikina, the end of this question. This is the end of this question. Any question, please? I'm sure no question. Question still there? Okay, no wala. Okay, a minute. Let me share only the question, please. Let me share only the solution. So you can go ahead, Syria. I think I've unmuted everybody.
Okay, yes, sir. My question is, since companies are divided into like three, we have small company, medium companies, and then the large company. Why are we using the 30% on this 99 million since
What did you
it's
say?
not up to 800?
What did you say, please? Okay,
My
are you talking
question,
about the application of the small companies, right?
yes, sir. The rate at which we are charging this.
Oh, we are going to be making use of the global income, please. We are going to be making use of the global income.
Okay.
I hope that is clear.
Yes, sir.
Okay, thank you. Faidat.
Good evening, sir. Please, my question is from the beginning. How we multiply the number of minutes? Multiply by what do we multiply by?
It's in the question. In the question, they give us the stuff is in per minute, right? The number of minutes they give us in minutes, they didn't give us the figure. And they told us that the airline is charging 50 cents per minute. So that means you need to first get how much did they collect in dollars by multiplying the number of minutes times 0.5, which is the 5 cents. Sorry, 5 cents. Then when we get there, you get the dollar figure, and you now multiply with the exchange rate. You multiply with the exchange rate for you to get you multiply with the exchange rate for you to get the income for the income that you are going to be using in naira. How that is clear, man?
Yes, sir. So the 5 cents is 0.5.
What do you say?
Multiply by the exchange rate. The 5 cents is 0.5. Multiply
Yeah,
by the exchange
0.5.
rate. This is
Yes,
198.
yes. 0.5 cents times the exchange rate. That means dollar to naira is 198 times number of minutes. Up is clear.
Yes, sir. Thank you, sir.
Okay. Azan Kodri.
Yeah, good evening, sir.
Good evening,
Thank you
sir.
so much for the class. I really appreciate your effort, sir.
You are
Sir,
welcome,
my
sir.
question is similar to that of the first person. Concerning the company income tax, which was the tax percent of the taxable profits. So I really don't understand how you answer the person. For there is small company, there is medium company, and there is large company. So, and
I
the
said we are going
percentage
to
for
make use of
medium is,
the global income.
yeah, the global income here.
Please,
The
Israel Samuel, can you please mute your mic?
the taxable income here, sir, is 86,983. Is that what you mean by
Global income, global income, global income. That means the
that's
income that they made globally. This one, the
okay?
one with
If you
the step
consider that,
one,
that means the company,
the step one.
okay, that means, okay, the company will fall under a medium company then.
No, 381 million, medium bow. 381 million, no.
Okay, that will be large company.
Uh-huh.
Okay,
Okay.
thank you very
Rally
much.
at, you're welcome, boss. Rally at Musa.
But sir, the that minimum tax, is it like a part of the step that we must compute it when we are
Yes,
when we are
yes. For specialized businesses, you must. It's a must.
oh,
2%
then we
of the
have to
national
compare
income.
it. Okay,
You
so
now
what if
compare which one is higher.
if the tax is higher, that's
If the
the
minimum tax liability is higher than the 30% of taxable
mm,
profit, they are going to pay the minimum tax liability.
but if the 30% is higher, we'll pick the 30, right?
Yes, now you pay the
Okay.
30% that is higher.
Okay. Just that the two questions you solved, the minimum is higher. Thank you.
Both are higher. But what I just like about this second question is that, okay, what if they give me what if I get the global income? How did
Sir, I
uh,
remember what I wanted to ask.
why did
Is
you
that
remember
that is that step three? This step three, the way you computed it, is it that is a different method or
that?
like
Actually, in this step three, when you get the global income, you can now pick the global income and go and minus all the expenses they gave you in the question. You now arrive at net profit reported. You now add back disallowed expenses. So Israelite journey now. Why do I
okay.
need to do that? I just pick the global income and minus all the allowable expenses from it. That is what I
Okay.
just did.
Oh, okay. I get you now. I get you. Thank you, sir.
So let's do
Thank
it
you.
sharp sharp. Instead of doing global income minus all the expenses, we now arrive at net profit reported. We now pick the net profit reported. Now start adding back disallowed expenses. Oh, no, 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 no. We don't need to do that. We don't need to do that. We can just do it faster and then we forget about it. Okay, I believe that should be all the questions that I have this evening.
Sir, I have a question, sir.
I can't see you raising up your hand now.
Sorry, sir.
Oh, yeah, go on.
Since they said the company has branch in Abi office in Kwara State.
Yes.
I think that I'm thinking that maybe we charge tertiary education,
Yes,
sir.
yes, you are supposed to charge tertiary education tax. You are supposed to, but what they actually ask us is the advise the company on the total tax liabilities for the relevant year. We're supposed to compute tertiary education tax. Yes, we're
Okay, sir.
supposed. We're supposed. Okay, so let me quickly add it. The tertiary education tax. That one is going to be what? 3% of Nigeria adjusted profits. That's Nigeria adjusted profits. Okay, so this is the tertiary education tax. Thank you for your question. I believe this should be all. I'm tired. I hope this is all, guys. Okay. Thank you, everyone, and enjoy the night. I wish you a wonderful night rest. So please, those that will wake up in the night to read, please try. Those that you read later on in the day, please try. Those that will read immediately, please try. Please leave Netflix for now. Leave football for now. Focus on what you are supposed to do. And when you are done, you go back and watch all those football that you need to watch, all the Netflix you need to watch. You watch them, please. If possible, save off your data so that there won't be distractions for you. Yes, Mr. Kokolawale, don't watch ball. Leave Nigeria. They are collecting their own dollars. Oh. They are collecting their own dollars per week. Whether they win or lose, they are collecting their money. So leave them for that one. Okay? So thank you guys, and I wish you guys the best as you guys prepare for your exam. So good night, everyone.
Thank you, sir. Thank you.
Okay.
Thank you, sir.
Good night.
Thank you, sir. God bless you, sir.
And you too, sir. Good night, sirs.